For Canadians serving in the military, understanding the tax implications associated with their service is crucial to ensure that they are compliant with the Canada Revenue Agency (CRA) requirements while taking advantage of the unique benefits that apply to them. I will explore the various income tax implications associated with Canadian military service, including tax-free earnings, deductions, and special tax considerations for those serving overseas. It's essential for Canadian Armed Forces (CAF) members to have a clear understanding of how their service may affect their tax obligations, so they can plan their finances accordingly. Income tax exemptions are available to CAF members who serve in designated operational areas. According to the Income Tax Act, serving in one of these areas entitles CAF members to tax-free earnings for the portion of time that they serve there. This tax benefit is meant to recognize and acknowledge the significant sacrifices made by those who serve in high-risk operational environments. It's important to note, however, that not all deployments are considered tax-exempt, and members should consult their chain of command or a tax professional to ensure they are aware of the specific criteria for tax exemption. In addition to tax-free earnings for qualifying deployments, CAF members can also claim certain deductions on their income tax returns. These deductions help to reduce the amount of taxable income, ultimately reducing the overall tax obligation. Some of the more common deductions for CAF members include moving expenses. CAF members who are required to relocate due to the military service may qualify for moving expense deductions. These expenses can include transportation costs, temporary accommodations, and incidental expenses related to moving to a new location. Employment expenses. CAF members may also be eligible to claim various employment-related expenses, such as uniforms, protective gear, and tools required for their specific trade. To claim these deductions, members must obtain a T-2200 Declaration of Conditions of Employment form from their commanding officer. Childcare expenses. Military families often need to secure childcare services to accommodate for training and deployment requirements, and these expenses can be claimed on a CAF member's income tax return as well. CAF members who serve overseas often face unique tax situations, especially if they have been deployed to a different country for an extended period. Here are a few important tax considerations for those serving overseas. Non-resident status. CAF members deployed for a long time may be considered non-residents for tax purposes if their immediate family is also not living in Canada. This status can have a significant impact on tax obligations and benefits available, and members should consult with a tax professional to understand these changes. Foreign tax credits. Military personnel who pay income tax to another country may be eligible for foreign tax credits on their Canadian income tax returns. These credits can help offset taxes paid to other jurisdictions and reduce the overall tax burden. Pension and benefit taxation. CAF members should also be aware that the military pension and benefits they receive, including tax-free earnings, may be subject to tax in the countries where they are stationed. It is essential to understand the tax treaty provisions between Canada and the country in question to avoid potential tax issues. Canadian military service comes with unique tax implications that every CAF member should be aware of, whether they are serving at home or overseas. By taking the time to understand these tax nuances, CAF members can ensure that they are remaining compliant with the CRA and maximizing potential benefits related to their service.